Anil. Hi guys. So okay. Uh, Now actually we are discussing about how to select a stock. Okay, for investment purpose. Okay. Basically, we try to look for a pattern. Like before you get into a stock, there must be either a sideways movement that a stock has done previously, or there must be either a downwards movement. Okay. uh, so with these two, when we get when these two criteria fill, we use our indicator, this one, 150-day period, WMA. Okay, it's a weighted moving average for 150 days. That is equal to 30-week EMA. Okay. uh, so we look for stocks that are above this indicator. It turns green when the stocks are above, and it turns red when the stocks are below. Okay. So uh, hello sir. uh, okay, what we basically spoke right now was about the indicator that I'm using on my screen. It is uh, this one. It is 150 days weighted moving average. Okay. It turns green when the stock is above it, and it turns red when the stock is below it. You can find this on trading view. Okay. We only try to enter the stocks that are above this. Okay. And that too, uh, previously the stock must have either been in a sideways movement or a downward movement. Okay, but it should not be in a prolonged up move. Okay, we don't enter stocks that are already in a prolonged up move. Like we enter here, this is the ideal entry, but we do not enter here. We enter here and we only exit over here when we get the exit sign. Okay. But which stocks to choose, and are all stocks above the green 150 WMA are viable? That's not true. Okay. There are stocks that come under uh, first preference stocks, and there are stocks that come under second preference stocks, and there are stocks that come under third preference stocks. Okay. We'll discuss about them. Okay. Basically now, whatever stocks we enter, they should compulsorily be outperforming the index. Okay. There are few ways of finding out how whether the stock is outperforming the index or no. That we'll discuss in further. Okay. But this is a must. When a stock outperforms an index, and when it outperforms its own in sector, then it when a, you get when you even get a 5% move from the index or from its sector, the stock is going to do 10 to 15%. Okay. This is very important. Okay, keep this in mind. uh, we, if you guys want me to show any stock, instead of me showing my own, you guys can ask me. You can unmute yourself and ask me, or you can write it down in the chat box, so that I'll explain where the entry should have been taken for the stock and why it should have been taken. Himayk sir, Anil sir, Dheeraj sir, any. Can we enter when the volume is good? Yeah, volume is also a must, but it is not the only thing that we should consider. Okay. uh, what are those? Okay. Volume along with the performance of the stock, it should be better than the index. Only then we enter. Sometimes we get good volume, but the stock, it won't be performing better than the index. So those stocks will wait. We'll wait for a better entry. Okay. Yeah, the indicator is WMA, and those levels which I've which I drew on my screen are from this indicator. Okay, it is trend based fib extension. Okay, I'll talk about this tool later. Okay, okay, fine. uh, Indicate, please tell the indicator again. Okay, the indicator is 150 days period, uh, WMA, weighted moving average. It's 150 moving days. Okay, the reason that I use 150 days weighted moving average is because it is from this person's from whom I learned this relative strength. Okay, it is Steve Weinstein. In this book, he mentions about a 30-week period EMA or 30-week period WMA. But instead of 30-week EMA, I found that 150 days WMA gives equal signals when both of them compared side by side. Okay, if you guys want to know more about Steam Instant, you can buy this book. Okay, you get it on Amazon or all. It's a very good book. Okay. Okay. So did you? So Humayun sir, did you get the indicator? It's a WMA 150 days. Okay, it turns green when the
Yes,
stock is
sure.
above. Yeah, and it turns red when the stock is below. Okay. And you can ask me if any stock that you want me to see where my entry will be and why it will be and how I choose it. So basically, Steve Winston in his book, he talks about an indicator that actually show us when the stock is performing better than the index. Okay, that's called the relative strength. Okay, so we won't go much about that in this, but I'll just give a basics of it so that you'll come to know what the indicator does. Okay, uh, see, this is the indicator. Okay, this indicator is from that modular guide. It's actually a single indicator. I used two indicator and two indicators and I combined them together in one panel. Okay. In this indicator, we the settings that I use is 61. Okay. And the other one that I use is 123 days. Okay. So basically, 123 days indicates almost half the year of trading days. Okay, and 61 is half of what 123 is. So basically, when these two lines are above their zero line, okay, the zero line for the green indicator 61 period is the red one, and the zero line for this yellow indicator, the 123 period, is the white line. Okay, when these indicators are above their zero lines, that means at 61 days the stock is performing better than the index, and at 123 days the stock is performing better than the index when these lines go above their zero lines. Okay, did you guys understand that? Okay, so basically we got a, yeah. Okay, I'll explain again. Okay, okay. The see this green line. It is an relative strength indicator. Okay, and the yellow line. It is also a relative strength indicator. Okay, basically these two are different indicators. I just pan them together. I just move to a new pan below. These are the two different indicators, RS with a different setting. I just merge them together so that I get more space to work on. Okay. Okay. So the green and red go together. The green zero line is the red one, and the yellow and white they go together. The yellow line's zero line is the white line. Zero line is nothing but whenever the stock is performing better than Nifty. Okay? When the stock performs better than Nifty uh, at 61 days, the green line goes above its zero line. Okay, if it doesn't perform better than Nifty, then the green line, that is 61 days RS, will be below its zero line. The same thing with the 123-day period RS also. If the stock is performing better than Nifty at 123 days, the stock be above the zero line, that white line. If it is not performing better than Nifty, then it will be below the zero line. So basically, we uh, we look for stocks that are performing better than the index, because those are the stocks that give better performance when the index move at 1 or 2%. These are the stocks that move at 5 to 10%. So we mainly focus on this kind of stocks. Okay. Did you guys understand Vodafone? Okay, you want to see Vodafone? I'll just check with Vodafone. Okay, yeah. So this is Vodafone. Nice. Thank you, Dheeraj. So this is Vodafone. The first time when the stock went above the 150-day period, WMA was here, but it did not sustain, and we did not have a clear entry also from the RS. Okay, the only time when the RS gave us a signal that the stock is performing better than the index was over here. Okay, so at this point on 19th May, sorry for the disturbance. On 19th May, the stock went above 150 period WMA, and at the same time, the indicator of uh, modulus, so it showed that the RS period above zero lines. Okay, that means the Nifty, the Vodafone stock is outperforming Nifty, and this is the move that we got when such a thing happens. Because when Nifty moves a little, the stocks that are performing better than Nifty gives a huge. Okay, and you guys asked me about my tool, right? That I used on the chat previously. Is this okay? It is called trend-based fib extension. Okay. No, we don't need to select stocks only from Nifty 50, but keep this in mind. Always select stocks that are fundamentally good. Okay, the stocks that you think that can survive for a longer period of time. Okay, for example, like I only trade in stocks that I see its future that's clear. Like Britannia, they'll be there for the next 100 years. I mean, the business will be there for the next 100 years. Okay, the demand for the daily consumption goods will be there, always there for next 100 years. Okay, those kind of businesses I try to select. Okay, yeah, communication stocks, all these. Okay, where stocks where you think their business will be there, where the need for the business exists for a longer period of time. Those kind of stocks mainly I concentrate on. Vodafone's bright future, I'm not sure. With this Geo giant in between, I don't know, because we only look for the first preference stocks, right? These come under second preference stocks. Okay, when you have a huge competitor, why don't you find an entry in those stocks than to find an entry into a second category stock. That's my way of looking at the stock. You might have a different perspective towards it, but that's how I look at it. Now let me just complete the use of my tool and I'll get back. Okay. Lower time frame, no. Actually, the higher the better, brother. You see, in stock market now, uh, on the there are two kind of movements that happen. Okay, one that happens totally on fundamentals, one that happens totally on the company's performance, its growth and all, and another is the move that happens on the sentiment. Okay, these are shorter moves. Okay, like at a longer time frame, stocks companies perform well, they grow. Okay, but at a shorter time frame, there are many things that come into play, mainly the sentiment of the things happening globally, locally, news, politics and all this. Okay, so at a lower time frame you get lot of obstacles in between. So it's better to trade at a higher time frame, minimum uh, 1 day time frame. Okay, not I don't suggest less than a day. Okay, I prefer mostly day, sometimes even weekly time frame, but don't go lower than a day. Okay, apply it for intraday. No, don't apply this on intraday. Okay, it's not for intraday. This it doesn't. I mean, it didn't work for me on intraday. Intraday we can do that later. Okay, let's first concentrate on positional long term, then we'll get back to intraday later. Okay, now let me show my tool that I use on trend based fib extension. Okay, so at this point now on 19th May the stock gave us a buy signal. It was positive on both its RS. The both of its RS are positive, and the stock also crossed its 150-day um, WMA. So what I do is from the entry point. Okay, it's not that where you enter, but where the entry should have been happened. Okay, after the first day close, the second day candle opened here. So no matter at what time you enter, the marking should be done with the next day opening candle. Okay, where it opens. So from there, so till where you can find proper support. Okay, a proper swing low. Okay, you can first click there, and second click you can you after clicking it, it get the it get pinned over there. Okay, so the second click, bring it till where you think is the proper support. Okay, maybe somewhere till here. Okay, so there, and again go back to the place where you first clicked. Okay, okay, you got it. First, the entry, what is supposed to be your entry. Okay, not where you entered, but what has supposed to be your best entry. There the first click and the second click to the recent swing low or a proper support area, and third click again back to where the proper entry should have been. Okay, because these levels are very important, so you don't click anywhere that you entered. Okay, it should be always done where the proper entry should be. Okay, so after that, this will be your entry point, that will be 0, and this will be your 1:1. Okay, this exactly uh, the area of the stop loss. This red is your stop loss, this your entry, this will be your stop loss, and this will be your target one. Exactly the same as the stop loss area, and this will be your target two. It's not target two, it's 1:1. This is 1:2, 1:3, 1:4, and so on. Okay, what I basically do now, these kind of stocks that we are talking about now, they give immediate move. Okay, when they are better than Nifty, when they're performing better than Nifty, and when they're above the 150-day period now, you just take this measure scale and just click over here. Okay, uh, from your entry point till here. Okay, this is uh, approximately 1 second. It's not. I'm just okay, from your entry point uh, till here. That is in 17 days, the stock had given 119%. You see that 119.77 percentage, that is in 10 bars and 17 days, 10 trading days, and total of 17 total days, we have gained this much. Okay, these are the returns that we may get. Okay, not compulsorily get, but we may get very good return when we enter only stocks that are performing better than Nifty and their sector. Okay, so okay, fine. So what the use of these levels is, we always when you enter a stock now, whether you are right or wrong, okay, still the stock may go in your direction before it goes against you. Okay, if such a thing happen, when the stock closes above its 1:1 now, when it closes successfully above this level, watch out, watch carefully. Okay, the stock should never again close below it. Okay, if it closes below it now, then you need to exit the stock, having a small stop loss below that level. Okay, I'll tell you how. See, it did not close below 1:1, it crossed above it, went successfully. Okay, then at 1:2 it went and closed above successfully, so nothing to worry. Then even at 1:3 it went and closed successfully above it. Okay, so nothing to worry. Okay, the only time that you need to be cautious and you need to get out the trade is whenever you have a red candle that closes below, after closing its 1:1 or 1:2, when it comes back uh, and closes below, that is the time you should be cautious. Okay, so you need to be cautious over here, and if you think you had already gained a good profit, you can book half of it and trail the remaining with a tight stop loss, or you can book at least 80% of your profits and trail the 20% with a tight stop loss. Okay, because these returns are very immediate. So it's we don't need to be in look, we don't need to be there in wait for a long time. We can get profits, and we can book half or the 80%, and we can trail the remaining for, whenever the signal changes completely. Okay, it's either if we get a when we can again exit at this second red bar that has closed at 1:2, below 1:2. At that time we can exit completely, and if that doesn't happen, if the stock keeps on going up, you can trail that 20% or the 50% stock that are remaining on your side with a close stop, with this watching out for these levels. uh, I guess we should have a watch on this as it is near support. Near support. Okay, Vodafone. I'll tell you that also. I don't enter a stock that has been already at an given a up move. Okay, it is my way. Okay, of looking at stocks. I don't have to be 100% right, or I don't have to be correct. But what I do is like, this kind of a move should have happened. Okay, and a down move must have happened for me to take a fresh entry. Okay, or a sideways movement must have happened, or a slightly downwards or a sideways movement must have happened before my entry. Okay, at that time my entry has more power, because this is the time when there is a good accumulation. Okay, so but Vodafone is not my preferred stock. Okay, and I don't even trade stocks that are in continued downtrend for 2 years. Okay, the stocks should be okay, even though if they are in downtrend for 2 years, they shouldn't be it. The move shouldn't be so powerful. Okay, it should be a normal down move, or with a proper structure, proper lower lows and lower highs and all. So where there be proper support when the stock moves again in our direction, these supports, these structures give us good support for the stocks to move further. Anything else, guys? Any other stock that you want me to explain? Please, please type in some stocks, or you can just on your mic and tell me which stocks to do. So now basically we understood this uh, indicator that shows stocks above shows stocks above nifty and above stocks that are in its sector. Okay, this doesn't exactly show stocks above its sector, but we get to know when they are above nifty. Bharti Airtel, let me check. Okay, Bharti Airtel, as of now we have no buy signal. Okay, the reason is it is clearly below our 150 day period WMA. Okay, and another reason is the stock is not performing better than Nifty. Okay, when the stock doesn't perform better than Nifty, when Nifty falls a little, they fall a lot. Okay, it's just the opposite. When stocks perform better than Nifty, when Nifty moves 1 or 2%, the stocks move 4 or 5%. Okay, and it's the same way downside also. When the stock, when the index falls 1 or 2%, these stocks fall 4 to 5%. Okay, it's like that. So we better stay away from these stocks. Okay, but if we talk about where the entry had happened previously, if we have gotten good entry anywhere, we'll see that. Okay, okay. See this, after a down move, okay, there was a period of consolidation and accumulation had happened. Okay, when this had happened, the stock after that had moved above 150-day WMA. Okay, so with this uh, and a confirmation that the stock is performing better than our index Nifty, at this, with this signal, we can try to get into the move or get into the trade at this point. But that is only when that that is only when if this stock is the best performer in its sector. Okay, don't go for the second performing stock in the sector. Okay, uh, why do you want to choose a stock that is performing uh, okay, whose performance is not uh, second? Okay, always search in its sector which stock is performing better and try to go with that stock only. Okay, ITC. Sorry for the disturbance, guys. There's construction going on here. Okay, okay, fine. ITC. ITC, it has no, right now we don't have any clear buy here, but according to me. Okay, they might, in stock market, na, there's one thing that I wanted to say, okay, to you guys. So that I have learned from my experience of all these years. Okay, in stock market everything works, and in stock market everything doesn't work. Okay, what I mean by in stock market everything works and everything doesn't work is there are times when stocks respect few indicators and oscillators, and there are times when they don't respect the indicators and oscillators. Okay, so the key thing in this now is your money management and risk management. Okay, so when you are good with your risk management and money management, like if you lose only a 1% of your capital, and if you win how much ever the market wants to give you. 1:2, 1:3, 4, 5, 6, whatever the market wants to give you, that much. Okay, so it should be like that. Whenever we enter now, there one more important thing. Okay, that I'll show you guys in 5 minutes. Okay, how I select stocks, I mean, like with the first preference stocks. They should, the stock, the your entry should happen somewhere near a proper support area. Okay, and there should never be an immediate resistance. Okay, there should never be an immediate long term resistance uh, at a place of your entry. Those kinds of stocks you avoid. Okay, in For that, we can talk. We need to remove all our indicators. Okay, before we select a stock now, we need to first mark few levels. Okay, for that we go into our monthly time frame. Okay, after going into our monthly time frame, uh, let's one second. Which stock? Okay, okay, I'll do that. Uh, okay, zero. Okay, fine. Uh, Let me just remove all this. Okay. Yes. Anyone has any doubt till now? Can someone mute their mic? Someone's mic is on. Okay. So basically, what we should do now, the first thing, in your free time, you select the stock that you think are fundamentally strong or fundamentally good. Okay. Then first go to a monthly time frame. Okay. Then after going to monthly time frame, you just mark the peaks of it. Okay, the highs and lows of the highs and lows. Okay, extreme peaks. Okay, you need to be they need to be visible. Don't go looking into them. Okay, if you can see them properly, that means they are there. If you can't see them, you need to look hard, then they are not there. Okay, so these extreme peaks, try to mark them. Okay, in monthly time frame. After doing this, okay, we need to, after marking the roughly marking the highs and lows, okay, of a particular stock in a monthly, you go down to weekly time frame. Okay, after going down to weekly time frame, you just fine tune them. You need to cover as many uh, touches, you need to get as many touches as possible, but also keep in mind they should be as small as possible, because this will be the area where your this will be an area which you consider as your stop loss. Okay, so your stop loss should be always small, right? So try to make it as small as possible with maximum touches as possible. Okay, uh, do this. Clear, right, guys? Okay, try to make it as small as possible. Okay. So after making this marking, then go down further to daily and further do uh, fine tuning to make it as small as possible, uh, with as many touches as possible. Okay, so this should be done without any indicators, and at a to all the stocks that you think are fundamentally good, or that stocks that have good value. Okay, then after that you get back your indicators. Okay, so after getting back your indicators now, what you basically do is, see, we mark this the level that we got for here for hero is from a monthly support. Okay, uh, the monthly in stock market, basically a sentiment now that it is from a uh, higher time frame support level. When something uh, at a higher level is showing you support, the people and the market tries to respect that level and tries to move accordingly in that direction. So exactly what I meant was our entry should not only be uh, based on our 150 days WMA and not only based on the indicator that's showing us the stock is performing better than the index. It should also be based on our stocks are now at presently at a proper support area. So with all these confirmations, with that we can clearly enter here with this as our stop loss. Okay, and we can either book, we can either mark our levels using our tool, or we can stay in the trend till near the immediate resistance. Whichever way you're comfortable, what the type of trader you are, you can do your way. The, should have to watch this. Okay, till now clear, guys? Someone do something. Okay, so everything clear till now? This is stock selection, selecting the stocks only performing better than the index and their own sector, and stocks that the entry should be in such a way that there shouldn't be a prior up move. Okay, there should be either a down move before it, or there should be a consolidation at it. Okay, so with this, uh, we can enter with the stocks that are at a proper support level. And if you find the stock that have immediate resistance somewhere over here now from the monthly line, if you when you draw those monthly supports and resistance, and if you think you can't even there is no, suppose from here till here, let's see what type of how much we'll get. Okay, okay. So from here till here, okay, so 1 is to 1, 1 is to 2, 1 is to 3, 1 is to 4. Okay, so nearly 1 is to 4 can be achieved. Okay, but if you think there is an immediate resistance at 1 is to 2, then don't go for those stocks, because uh, with this much of a space, I don't say that they're going to give entirely 1 is to 4 or 1 is to 5, but at least they can give you 1 is to 2 or 1 is to 3. But if there is a resistance at 1 is to 2 or 1 is to 3, then the stock can't even give you 1 is to 1, and it is not preferable to enter such kind of stocks also. Uh, Anything else, guys? So that's it. That's it, man. Simple. Just monthly supports. Mark the highs and lows. First thing that you need to do. Then get your indicator that shows the stock's performance against index. Okay, this you can get from. You can get this from over here. Uh, where is that? This modulus, guys. Okay, relative strength modulus, guys. Then I actually use two levels, so I just combine them. I combine them both into a single pad. Okay, then the settings, you can you can experiment with them with, okay, without with some I mean with a lower quantity. Prefer I don't ask anyone to do paper trading. Okay, but trade with a slow quantity, just to to get in with the real money you get. No, you try to do better performance. So you try initially with one stock, two stock, or five stocks, not more than that. Okay, five quantity. Then you just, instead of doing back test only, do forward testing also, back and forward, but with a lower risk. Okay, the lower the risk, the more uh, better you try to take your decisions. Okay, the higher the risk, the less performing your brain becomes. We have that in our we discussed that in our previous video also, right, in this concept. So that's it. Then marking, finding the levels, and 150-day DMA turning green. uh, that is it, guys. Nothing much, just simple as it. Anything else you guys want to know? Anil, Bhagwan
Nothing.
Das sir, yes, any doubts? Want to know anything? Dheeraj sir?
No, no doubt. Nothing.
Okay. So you guys clearly understood, right? How, what, how I select stocks and all? Bhagwan Das sir, I cannot hear you, sir. If you can type in, you can type in the chat also. Huh. One more important thing, okay, the most important thing that I wanted to share with you guys, okay, in stock market now, try to keep the things as simple as possible, okay. The simpler the better, okay, because just remember this: when you enter a stock now, when you enter a trade, only two things are going to happen. The stock is either going to go in your direction or go against your direction. That's it, not more than that, okay. So when only these two things are going to happen, why complicate things with why complicate things with so many, complicate yourself and complicate the chat settings and everything with so many things, okay. Just try to keep it as simple as possible, okay, and that's what our KISS concept is. It inspires others to do trading with as simple settings and as simple as possible, okay. Keep it super simple. When only two things are going to happen, it's either going to hit stop loss or either going to go in your direction. What is the best thing to do now is to take an entry in a stock that has a smallest stop loss possible, and that looks like it is easy for the stocks to give minimum 1:1 or 1:2. Okay, when the stock looks like it is easily going to give you 1:1 or 1:2 from your entry, okay, then those kinds of stocks you should try to go with, okay. Even if you think the stop loss is too huge, okay, and there is no proper prior price action that to indicate where the stop loss level should be, and with all this of confusions now, the best thing to do is just avoid the stock. We have more than 6,000 stocks to trade, okay. So why complicate things with the ones with that are not clear, okay. Just try to go with the ones that are best, okay, and try to make good money and have a good life, man. uh, well, that's it, okay. Simpler the better. Keep things short, simple and sweet, okay, crisp. And there is one important message that I wanted to say, okay. Just the indicator that I've talked about na, relative strength, this I've learned from Premal sir, okay. So I want to give credit to him for all the credit to him uh, for teaching me this, okay. And uh, yeah, that's it guys. uh, Happy trading. Take care. Bye. Any doubts, please let me know. I'm going to stop the session. Okay then.